Hi everyone. Today we're going to work on automobile insurance and all the different types of insurance that you could have. There are some types of insurance that you are required by state law to have. Others you can reduce the amount or not have at all. All right, so let's look at some terms. You have liable, which is responsible for damages caused. So if you cause something, a car accident, property damage, you are liable. Negligent, at fault for damages caused. So if you caused the accident, not only are you liable because you're responsible, but at fault for it. Automobile insurance is a contract between the driver and an insurance company where the driver agrees to pay a fee, which we're calling a premium, and the company agrees to cover certain accident-related costs when the driver makes a claim, a request for payment. So the premium is the amount of money you pay for your insurance policy. Your claim is the request for payment for insurance company by the policyholder. And liability insurance is the type of insurance that covers a person for damages, and most states set a minimum liability requirements. Now, there are a whole bunch of types of liability insurance. So you have bodily insurance liability, which covers bodily injury. If you are at fault in an accident, you're responsible for paying the medical expenses of anyone injured. You can purchase as much, what they would call BI liability, as you want. Property damage, or PD, pays for damage caused to other people's property. Let's say you run into a fence or take out a mailbox. You're financially responsible if you damage a person's telephone pole, fire hydrant, other car, or any other person property. Again, you can purchase as much PD liability insurance as you want. Uninsured or uninsured motorist protection pays for injuries to you or to your passengers caused by a driver who has no insurance or does not have enough liability insurance to cover your medical losses. A personal injury protection, which is mandatory in some states, pays any physical injuries you or your passengers sustain while in or around or under the vehicle, even if you are not involved in the traffic accident. It compensates you regardless of who's the fault, so that sometimes is called no-fault insurance. Your PIP insurance will cover you and people's insured on, or around, or under your car for medical treatment and possible loss of wages. Compensative insurance covers the repair or replace of parts to your car damaged by vandalism, fire, flood, wind, earthquakes, falling objects, riots, hail, damage from trees, and other disasters. Okay, so it basically covers your disasters. If your car is stolen, and if your car is older, comprehensive coverage may not be cost effective. So if you have a 30-year-old car, it may not be in your benefit to pay for this, where the cost of the car would not be worth replacing. Collision insurance pays for the repair or replacement of your car if it's damaged in a collision with another vehicle or object. If it overturns, no matter whose fault it is. If you took out a loan to purchase your car, the lender will probably require you to have collision coverage. If your car is older, collision coverage may not be worthwhile expense. So comprehensive and collision may not be worth your time, again, if you have a 30-year-old car. Car renter insurance pays for part cost of a rented car if your car is disabled because of collision or comprehensive recovery. And emergency road service insurance pays for towing and road service when your car is disabled. Only the road service fee is covered. Gas, oil, parts, labor is not covered. So these are all ones that you may have to have, and some you may not have to have. So let's look at some problems. So we have Quan's annual premium is $1,284. If he pays it quarterly, there is a $1 per payment surcharge, or an extra fee, to be added on to his quarterly payment. What is his quarterly payment? So we're going to want to take the $1,284 and we're going to want to divide that by 4 because there's 4 quarters, and we're going to get $321. Now we're not quite finished because he has to pay a $1 surcharge for paying it quarterly. We have to take the $321, add the extra $1 per quarter, so he has to pay $322 every quarter. All right, let's try this one about Stan. Stan has $25,000 worth of property damage liability insurance. He caused an accident that damaged a $2,000 fire hydrant and did $5,600 worth of damage to another car. How much damage must Stan pay? All right, so let's find the total amount of damage he did. So it was 2,000 plus 5,600. So he caused $7,600 worth of damage. Okay? Now, if this number, the total amount of damage, is less than the $25,000 he has in his insurance, so Stan pays nothing. Okay, now, the thing about property damage liability insurance, it's limited to per accident, okay? All right, so if you had multiple accidents, then we'd have a problem. So it's per accident. All right, now, when you buy into insurance, you always will have a deductible. And this is the part of the repair damages that you have to pay for as the driver before the insurance company pays. The higher the deductible, the lower premium the policy you have to pay. So let's say if you have a $500 deductible, you're going to pay so much. But if you have a $1,000 deductible, you're going to pay less. Okay, once the owner has paid the deductible amount, the insurance company pays the rest of the cost to get the repairs done. Collision and comprehensive insurance are sold on a deductible basis. Collision insurance only covers damage to the policy car, not property damage or other damages via other driver's vehicle. If the driver has, let's say, a $500 deductible and repairs to his cost $2,200, the driver must pay the first $500, and the insurance company pays the balance, or $1,700. So Peter here has collision insurance with a $1,000 deductible. Peter backs his car into a lamppost and causes $4,300 worth of damage to the car. How much will his insurance have to pay? Well, there's a total damage of $4,300, but he has a deductible, so we got to subtract that out. That's how much Peter is going to have to pay. So the insurance company is going to have to pay $3,300. Okay? All right, now, that kind of thing, that's not the only thing that you have to worry about. You have also the bodily injury and property damage. So bodily injury insurance covered expressed by two numbers. Okay, so it's kind of looks like a ratio or division problem. The first number is the maximum amount per accident that the insurance company will pay in thousands of dollars to one person that is hurt and sues you due to your driving negligence. The second number represents the maximum amount per accident your insurance company will pay. So there's two parts: per person, per accident. Okay. And in total to all the people claims ensue a result of the accident. Okay, so the per person, okay, will have, that's how much you're going to choose. If that person sues you and that person sues you for more than that, you got to pay. The rest is coming from the insurance. Sometimes bodily and injury property damages are combined in a 3-number system with 2 slashes. The numbers 100, 300, and 25 represent 100,000 and 300,000 BI insurance, bodily injury insurance. That means that they'll pay $100,000 per person up to $300,000 per accident with a $25,000 personal deductible insurance or property damage. All right, so let's take a look at this one. Bob was in an auto accident caused by his negligence, so he is at fault. He has a 100 and 300 bodily injury insurance. 3 people were injured and they sued. 1 person was awarded $140,000. Each of the other 2 were awarded $75,000. How much does the insurance company have to pay? Okay, now based on the numbers, he has a $100 and $300,000 policy, which means that $100,000, even though it says 100, it's 100,000. That's how much the insurance company is going to pay out per person. Okay, so he's going to pay they're going to pay $100,000 for the 140. Okay, Now, it's 75 per person, so that's not over 100,000. So they're each going to get they're going to pay 75,000. Okay. All right, so for a total of 250,000. Now we also have to check per accident. Now, according to this, he has 300,000 per accident. So this total is less than the 300,000. So he is not liable for, he's not going to have to pay for that. So that's how much the insurance is going to have to pay. Now that missing $40,000 that the court awarded that was not paid by the insurance, that's going to have to be paid by Bob. Okay. All right, so let's try another one of those. Oh my. All right, so Raggio has a policy with a 150 BI with $50,000 personal property damage and 50,000 PIP. I forget what PIP is. Let's go back up here. PIP is personal injury protection. Okay. All right, he causes an accident in which he hurts 7 people in a minivan and 4 people in his own car, including himself. So the total medical bills for all involved equal $53,233. Okay, now the total. Okay, how much does the insurance company have to pay? Well, he has $50,000 personal injury protection. So as long as he has $50,000 per person, 500 per person. So this is the total right here. So as long as none of them individually was over $50,000. Okay. All right, so the insurance company will cover it. Okay. Now, because there was no lawsuits or anything, we don't have to worry about medical claims under the PIP. All right, guys, that's it for today. If you have any questions, please let me know. Remember, we're going to keep everybody safe, and I'll talk to you again soon.